The first thing you would ask yourself when contemplating on a consolidated debt loan is, what is consolidated debt loans? Consolidating some or all your debts is a process of combining all your debts into a single or one loan, with one monthly payment and in most cases low interest rate. The lending company, who consolidate all your debts into one, will pay off all your current debts and loans and issue a new loan to you. Now that all your current debts are in one loan, you will only need to make one single monthly payment. This could be your first query when thinking of consolidation, but either way it is entirely up to you. Benefits. Some of the benefits of a consolidation are that the payment processes get simplified. No more multiple monthly payments that may stresses you out. You can lock in a low interest rate, which will mean more savings for you. You can also extend the payoff time to several years depending on your eligibility, though this will increase your total interest to be paid on the life of the loan. You will only deal with one lender and can also lower your monthly payment. You may also ask, am I eligible for a consolidated debt loan? Almost anybody can ask and get to consolidate debt loan. You can also consolidate anytime you would like to do it. Eligibility for consolidation varies from company to company or from lender to lender, as their basis for approving varies. But this can easily be checked by logging online to verify or inquire about their qualifying requirements. For student loans, it is a little bit different. Some consolidators will require a minimum of $10,000 in total debts for them to consolidate your loans. For school consolidation loans, the best place for you is through the federal government loans program. Here you can get the lowest interest rate for your college and or school loans. How about my monthly payments? How much will they cost me? The monthly repayment again varies depending on the amount of the loan and the length of the loan term. The shorter the loan term, the more the amount is, whereas the longer the term is, the less amount money you have to pay monthly. For students who do consolidate debt loans, they usually have flexibility payment options, depending on their budget and income. Just a reminder, the faster you pay it off, the less interest you have to pay. How much is the interest on a consolidated debt loan? Most lenders have a competitive rate of interest, but if you shop around, you will find the best rate. Do some due diligence and research among the lenders who has the lowest interest rate. For student consolidation, it is usually the weighted average of the interest rates on the loans being consolidated. Some have a variable rate and some have a locked interest rate based on the current federal rate. Please be reminded that even tenths of percentage point can mean hundreds of dollars to you, so always consider the lowest possible interest rate. Start of repayment and about deferment of loans. The start of repayment for students usually get a 9-month grace period on repaying loans once you are out of school, and some are 6 months. But the best thing to do is start sooner and you will be better off. On deferring your loan, yes you can, but that is if you are eligible. If for some reason you are not employed, or you are encountering some financial and economic difficulties, the U.S. Department of Education will pay the interest that accrues during the deferment period. This applies to school consolidation loans. When you defer loans, you do not have to pay it back, and interest will not accrue. To maintain a good credit rating, do not default on your school consolidation loans to avoid penalties and more payments later on. When you know your options, you may have the option to consolidate debt loans.